All right, now let's take a look at what's happening in the world of business. The global economy would have to wait a little longer for a possible US Fed rate cut. And the reason? A second straight month of stronger than expected inflation. That has effectively shut the door on the possibility of a rate cut before June. Not just that, higher than expected inflation also makes back-to-back reductions look increasingly less likely. Gasoline and shelter prices drove the February consumer price index up 3.2%. Even underlying core inflation, including gas and food prices, slowed less than economists had forecast. However, this is unlikely to impact what the US Fed's decision would be next week. Policymakers are expected to leave the policy rate in the 5.25% to 5.5% range, where it has been since last July. Analysts argue that policymakers will have very little data in April to give them confidence that inflation is under control. They add that even by June, there may be insufficient data to justify more than a couple of rate cuts in 2024.
US policymakers will release fresh quarterly projections at next week's meeting, but high inflation raises the possibility of just 2 quarter-point rate cuts this year compared to the earlier expected 3.